Welcome everybody for another exciting boot camp training, Forex boot camp training this Saturday. Um, and in this session, what I want to do is go over the importance of a trading plan, how to create a trading plan, and I'll also share my trading plan with you guys as well. Because without a trading plan, you really don't have an inkling or an idea how to be productive in or successful in trading the Forex market. So with every plan, right? You have to have a plan put in place in order to execute your strategy. And what I want to do is just share with you my trading plan, and what you guys could do is either add to it for yourself, adapt it, change it, but this is going to be the skeleton with regards to your trading plan and um, the importance of creating a trading plan going forward. Because without written, definable rules, you're going to be all over the place. So you got to have written definable rules, just like traveling to a vacation location, right? You have to know where you're going, but before you get there, you have to have a plan, right? Or a map to get there. And then the map tells you, what plane to take, what time you need to be on the plane, if you need to, drive there, what roads you need to take, where to make a left turn, where to make a right turn, so on and so forth. If there's toll bridges along the way, it'll tell you, right? You got to pay some tolls and things of that nature. So you're not going to that vacation spot blindly, because if you do that, you might get lost. And what you don't want to do is get lost, right? Especially if you're going to a destination that you're not familiar with. So there's no different in the Forex market. You got to have a plan, a roadmap, so to speak, that'll help you become more successful and productive, okay, going forward. So let's dive into some content that I want to share with you guys. And then this might be a two-part session training. And if it is, I'll let you know. But right now, I'm just sharing with you the trading plan and the skeleton part. And then towards the end of this, I'll share with you exactly what I've written down on paper. So definitely take notes, because this is something that you're going to want to adapt in the near future, if not today. Okay. So my trading plan consists of the following: trading supply and demand, marking up my highs, marking up my lows. Okay, so I mark those up on the charts. Look for and identify the trend. Okay, so the question is, what is an uptrend? So you got to ask yourself questions when you're looking at the chart. What is an uptrend? Um, no, you have to ask yourself, is it an uptrend? And you have to ask yourself, is it a downtrend? So that's very important. I use Fibonacci, so I place Fibonacci's on a chart off the 4 hour, and I look for supply and demand. Okay. Then I look at the candles. Is the candles at a discount level or a premium level? Okay, we'll go over that, what discount and premium levels are. Rule of thumb: buy at discount and sell at premium. Identify head and shoulder patterns. Place sells if it's a head and shoulder pattern. Okay. Identify inverted head and shoulder patterns. Place buys. So if it's a head and shoulders pattern, you place sells. If it's an inverted head and shoulder patterns, you place buys. And then you place trades, and you shoot for a either 1 to 2.5 ratio or a 1 to 3.0 ratio once you place your trade. Okay. And always place stop losses and take profits. And take about 3 trades a day. Okay. So it's all about discipline. It's all about being consistent. It's all about not rushing the process. Okay. Because if you find yourself taking multiple trades without a trading plan, then you're violating your trading rules. And these are your rules you're going to set forth for yourself. And yeah, patience is the key, because these setups, you're looking for perfect setups. They don't happen often. But when they do happen, you're ready to execute your setups and your trades. Okay. So let's dive into it deeper. Excuse me. My professional Forex trading plan. So the objective is to execute trades based on thorough analysis of supply and demand dynamics, trade identification, and technical patterns, while adhering to risk management principles. So number one, analyze the trade setup. identify highs and lows, or significant price levels to determine potential areas of supply and demand. Trade identification, assess the prevailing market trend by examining price action and indicators. Fibonacci placement, apply Fibonacci retracement levels on the forward chart to identify potential entries and exit points. Price evaluation, determine whether current price levels offer a discount or premium relative to the prevailing trend. 2, trading rules. Buying and selling, adhere to the principle of buying at discount levels in uptrends and selling at premium levels in a downtrend. Pattern recognition, recognize classic chart patterns such as head and shoulders for potential trend reversal signals. Trade execution, place sell orders upon confirmation of a head and shoulders pattern and buy orders for inverted head and shoulder patterns. Risk reward ratio, aim for a minimum risk reward ratio of 1.25, 1 to 2.25, sorry, or preferably 1.1 to 3, okay, for each trade. Those are your reward ratios. Number 3, risk management, stop loss and take profit. Always set stop loss orders to limit potential losses and take profit orders to secure profits. Daily trade limits, execute a minimum of 3 trades per day to maintain discipline and avoid over trading, which is really important. Okay. Now, I'll be sharing with you guys a lot size strategy in the next video. I don't have it on here, but I'm going to definitely share a lot size strategy that you guys can execute on your trades, which would be like a 30-day lot size strategy. I'll be placing that in the next video. But note to self. So I'm going to take this, well, I'm going to use that as a reminder. Note to self. This trading plan is designed for discipline and strategic trading. Adhere to the plan's principles and adhere to the plan's principles is crucial for consistent performance and risk management. So definitely you guys could, rewind this video or take notes, whatever the case is. But this is my trading plan. And again, you could create your own. You could use this one. Feel free to do so. There's no patent on this. But this is a framework and a roadmap to help me execute my trades, and hopefully it'll help you as well. Because these are things that you gotta, adhere to and follow going forward. All right, so I wanted to share that with you guys because creating a trading plan is really, really important when executing your trades and so on and so forth. And always, always, always follow your trading plan. Try not to violate the rules. I know it's kind of hard sometimes, especially when the market is very active and volatile. You might see a setup and you might want to execute a trade, but if you have it written down, you won't violate your rules because those rules are important. Okay, so I want to share that with you. So let's dive into the charts and I'll go step by step on my trading plan. That way you can see exactly how I execute my trading plan on the charts. So let me go ahead and pull up a chart. Okay. And again, my website is wellnessmaterial.com. The link will be in the description. Typically, I always start here, and then I click on Trading View to go to the charts. But I want to share with you an exciting broker that I'm promoting on my site here. And if you click on broker I use, this broker allows you to fund your account with as low as $10, which is kind of cool. So, which is $10 worth of Bitcoin. Okay, so you can load your account with $10 worth of Bitcoin. You can start trading a live account through the broker that I use, or you can create a demo account. Okay, and they give you, fake money, so to speak, and you could trade those funds and adhere to your trading plan and see if you can increase or grow your demo account. And when you put enough practice in, you go ahead and start trading a live account. Okay. Um, I'll be sharing with you a strategy that I'm using going forward, which will allow me to trade more than one account. So let me just share this link with you guys real quick. Go to this link right here and create your trade copier. This is a system that I'm going to be using, which will allow me to trade multiple accounts. Okay. That way you can grow more than one account at the same time. This is a strategy that I just learned that I think is going to be really, really effective because this strategy will allow you to trade your main account, and then the same exact trades you place on that main account, you got to copy it to other accounts, which will be your sub accounts. And those sub accounts will then grow with your main account at the same time. So when you take a profit, your other accounts will be profitable as well. If you take a loss on your main account, the other accounts will also have losses. So the goal is to have one main account. So you trade that main account and then have two sub accounts. And then that main account, once you place a trade on that main account, it then copies it onto the two sub accounts. So in essence, you're actually growing three accounts at the same time, which is kind of cool. The goal going forward by following the trading plan is to grow each account, right? But the main account is the main account. Grow that account to $5,000. Okay. And then once you grow that account to $5,000, the sub accounts will also have $5,000 each. So that's a total of $15,000 that you've earned in total in all three accounts. Now it's going to take some time. Rome wasn't built in a day. This is just a suggestion, not a recommendation. So please, consult with your financial advisor, because what I'm sharing with you is just what I'm doing. It's not what I'm encouraging to do for yourself. If you want to copy me, that's fine, but no way, form, or fashion am I telling you to do it. This is what I'm doing. So that's just a disclaimer for so that way you guys understand exactly what I'm doing. So this is all optional, but definitely go to this link here and sign up for your copier. It's $10, so it's pretty cool. It's $10 to create a copier, and then I'll be doing a tutorial how to set up the copier. There's also tutorials online as well. But once you add your main account and you add two sub accounts, okay, you'll have three accounts total that you're trying to grow at the same time. Will you have losses? Yes. Will you have successes? Yes. It's the nature of the beast, right? But at the same time, instead of trying to grow just one account, I'm going to be trying to grow three accounts at the same time. Okay. So that's going to be cool. And you can always add more sub accounts going forward. So you can, I watched this guy on YouTube and he had 20 accounts that he was growing at the same time. I was like, what? Amazing. So he had his main account and then 19 sub accounts, total of 20 accounts. And I was like, wow, all through trade copiers. I was like, that's kind of cool. So I'm going to keep it simple for myself and just do one main account and two sub accounts. That's a total of three accounts. So whether you copy that or not, it's up to you. It's just a suggestion. It's not a recommendation. Nowhere am I ever going to recommend that you do something, because I'm not your financial advisor. So therefore, consult with your financial advisor before you take action on anything. This is just a suggestion, in my opinion, and basically what I'm following for myself. So, all right. So moving forward. So, okay, let me go to Trading View. Okay, again, Trading View is free, but they have some really good monthly plans, because you'd eventually want to use this tool for yourself. Because if you're building a house, you can't have, you know, no tools. You have to have tools to build your house, right? So these are the tools that you need to invest in to be successful. All right, so I want to make sure that you guys were able to get that link. Okay, so it did show. All right, so here's the chart. Here we go. So we're going to analyze this really quick here. Let me copy this here real quick. And you guys already know I do a top-down analysis. I start with the weekly. Just want to copy this really quick, download it on my computer here. Okay, so I'm going to erase this, everything here. And this is a naked chart, right? This is a chart of AUD USD. All right, so if we start at the weekly, what can we say when analyzing this chart? So my first objective, according to my trading plan, right, is to analyze the trade setup, identify highs and lows, mark significant price levels to determine potential areas of supply and demand. So where are the highs, where are the lows? So let's identify the highs and the lows. So this is a weekly chart. So here's a high over here. So we're going to identify a high or horizontal line, and we'd say this is one of the highs down here. Make that black. We're going to identify the lows. Okay. So this is a high, and this is a low. Okay. Next is to trend identification. Assess the prevailing market trend by examining price action and indicators. So what is a trend? So is it an uptrend or is it a downtrend? So we're going to take our arrow and we're going to do one of these numbers. And we notice that it's a downtrend, right? Because what do we have? Pathfind, lock it up. We have a high, a low, lower high, lower low, right? Because this low is lower than this low. Then we have a double top because this right here is equal to this one right here, but it never went above the trend line. So we still have a low because now we have a low here, lower high, lower low, lower high, lower low, and another double top because it never broke this high. So whenever you see that, it's a double top. It never went above the trend line to give us a reversal. So we're still in a downtrend. Then we see it didn't make a lower low, as you can see, because look at that. Didn't make a lower low, but it didn't make a higher high either, right? A lower high. So we can do one of these numbers, but this right here, then we had consolidation right here. So we can do this. Then we have a lower low. And it started to go back high, but it never broke this high. So we're still in a downtrend. This low is lower than this. Okay. We want to make sure that we get lower to this because once we get lower to this, we got a lower low. All right. So it's doing one of these numbers here. So it didn't break the trend line. So therefore, we can anticipate it to trend a little bit lower. Now, if it bounces off the low and then breaks the trend line, then we have a reversal. So you got to keep an eye out on that, right? You got to keep an eye out on that because this is your trend line. So if it continues to go maybe a lower low, lower than this low, we're in a downtrend. Then it'll bounce back up, hit the trend line again, and try to do one of these numbers. Okay, so we got to pay attention and take a look at it going forward. So right now we could just say we're in a downtrend, okay, because it's pushing down, because it just came off this trend line right here. So what do we identify? We identify that we're in a downward trend, okay, and we're guessing, right? We're anticipating it to go lower, okay? All right, so next is to Fibonacci replacement levels. So basically, how does that work? Let me show you. So I'm going to erase this. Okay, so now we're still on the weekly, and we're going to take a look at or pull out the Fibonacci tool, Fib retracement, right? So we take it at the low, and it's the extreme low over here. So we're going to need to, let's do this. Take this low and push it down here. This is the lower low. All right. And then we're going to take our fib, take it from the bottom to the top, which is right here. Stretch it all the way out. Okay. And our sweet spot, 61.8, 71.00, and 79.00. So we can anticipate it coming down here. Okay, well, no. Let's reverse that because that is for an uptrend. Let's reverse it because we're in a downtrend. And to reverse it, you're going to click on the gear, click on reversal. Okay. So basically, as you can see, it went up. You see a retracement here. Okay. But it actually bounced off to 61.8. So there you go. That's where those are the sweet spots. So this is the sweet spot right here. And what did it do? It bounced exactly off to 71.00. So that's why we used the Fibonacci retracement. Because once it got up to these levels here, it never broke the trend line. It bounced off. Okay. It started to go a little bit lower, right? Okay. And then if you look at the candle, if I open this up and look at the candle, what do we see? We see a bearish engulfing candle right here. Okay. But this candle is bigger than this candle. And then we have this candle with a long wick, right? A long wick on top, which means the buyers couldn't push it up higher. The sellers was pushing it down, which caused this to be a reversal, right? So the sellers stepped in and created this shooting star right here. And then the bearish engulfing had developed. And then all of a sudden it started to push downward off the weekly. Okay, so you can analyze this and say to yourself, okay, this is off the weekly chart, so I can anticipate on the 4-hour and the 1-hour that that I need to follow the trend going downward. You don't want to place buys, you want to place sell orders. Okay. And when I talk about buying and selling, okay, which is the next section, is price evaluation. Determine whether current price levels offer a discount or premium relative to the prevailing trend. So premium levels are above 61.8. So I did go over above 60, well, 50%. Above anything above 50% is premium levels. So you want to sell in premium levels, buy in discount levels. So since we're in a downtrend, we're going to sell in premium levels. So anything above 50%, which is where it's at, above 61, above 71. It hits 71, so as you can see, that's a sweet spot. Okay, and then it bounced off and came back down. Okay, so that's part of the trading plan. All right, trading rules: buy and sell. Adhere to principles of buying at discount levels in uptrends and selling at premium levels in a downtrend. So we're selling at premium levels. Okay, pattern recognition. We have to recognize whether we see a head and shoulders or a inverted head and shoulders. So as you can see, it's developing a head and shoulders. Okay, so let me chart that out for you. We take this tool here. We could say the shoulder started right here. The shoulder and the neck and the head. Okay. All right. So that's your head and shoulders. And what did I say? When you see a head and shoulders pattern, you want to sell, right? You want to make sure you're, adhering to the trading plan. Head and shoulders. The head and shoulders has developed, and you want to sell at head and shoulders. There you go. Trade execution, place sell orders upon confirmation of a head and shoulders pattern, and buy orders for inverted head and shoulders pattern. Risk and reward, aim for a minimum risk reward ratio of 1 to 2.5. Let me show you what that looks like. And it's all off the weekly. You'll see the same thing on the 4-hour, the 1-hour. But you want to place your trades either in the 15-minute or the 5-minute. Okay. But I'm just showing exactly what I do. And I do this exactly on every time period. This is the weekly. So I'm going to take another tool here and show you short position. So let's say we caught the head and shoulder at the right shoulder here, right? I'm going to put a stop loss above the neck, a little bit above the neck. I'm going to stretch this out to 2.5 or 3, depending on your tradings, how much you want to get in ratio. Stretch this out. 2.5. Okay. And yeah, that's what we're looking for. We're looking for this ratio. Set it and forget it. You place your trade, and hopefully it'll hit your take profit. So your stop loss is going to be up here. Okay. And your take profit is going to be down here. And that's as simple as it gets. Okay. So your stop loss is up here. You have your ratio 1 to 2.5, and your TP is down here. Okay. And you just wait for the trade to happen. Now it may happen in a couple of weeks because this is a weekly chart. A weekly chart. Every one of these candles takes a whole week to develop. So it may take a couple of weeks to get to your destination as far as you take profit. But at the same time, you've identified a downtrend, you've placed your order, you executed your trading plan, you followed your plan, and hopefully it all pans out because the market doesn't owe us anything. It could reverse and go in the opposite direction and hit your stop loss, but at least you know, you did a technical analysis and then you put together, and you followed your trading plan and you executed your trading plan based on what you see in the markets. And that's exactly what I've done here. So you can rewind the video and watch it over and over and over because it's not that hard. And you'll do the same thing because the same thing you see here on the weekly, you'll see it on the 4-hour, you'll see it on the 2-hour, the 1-hour, the 15 minutes, and you want to enter either on the 15-minute chart or the 5-minute chart. Okay, so once you see the market going in your direction in any one of these time periods, you want to execute your trades on a sell. Okay, because you have your trend line right there, and you know it's a downward trend, and all you do is following your plan of action. Okay, this is your trend line. All right, that's your trend line, and you know that it's going down. So, all right, so that's basically off the weekly. You do the same thing on the 4-hour Okay, the 4 hour is right there. See the head and shoulders right there. Absolutely amazing. Zoom out a little bit. All right. So that's the head and shoulders. And look at that. It developed exactly as you had placed it on the weekly. Okay. And it's actually trending lower towards your TP, which is kind of nice. Okay. And you can go down to the lower time frames and you'll see the same exact thing. Because once you chart up your charts on the weekly, you'll see it on the 4 hour, the 1 hour, the 15 minute, and the 5 minute. So just executing the trade based on what you see on the charts. And yeah, simple as that. So if you guys got questions or concerns, you can always, put it in the comments area below or in our private chat and just ask your questions and say, whatever the question is, I'll address those questions going forward. But this is the end of this session, and I wanted to share that with you guys. Um, if you find value, give me a like or a thumbs up, whatever the case is, and come back next week. And all we do is practice, practice, practice this strategy over and over and over. Now that you got your trading plan in place, you're going to execute your trades based on your trading plans, which is your set of rules that you're going to follow for yourself, and you're going to follow your rules and not try to bend them. Sometimes we get so excited that we don't look at our trading plan and we start executing trades without following the plan, but you don't want to do that. You don't want to, break your rules. You want to be patient enough to find these setups and then execute your trades based on these setups. Because once you see these setups, um, it's always 50-50. It's always never 100% guaranteed you'll hit your take profit, but at least you've actually, have a plan in place, right? Because some people think, oh, this is gambling. No, this is not gambling. If you know exactly what you're looking for in the markets, because the same thing that you're doing to analyze the charts is the same thing that the big banks are doing. They're analyzing their charts as well. Institutional traders, they're analyzing their charts as well, and they're executing their trades based on a trading plan. Okay, so now that you have a trading plan, you're 100% more focused. You're 100% more dangerous. You're 100% more strategically minded, right, towards executing trades that'll go in your favor. Hopefully, it does go in your favor, but it doesn't. It's okay. You just go on to the next trade, right? Because you're one trade away for being profitable, for being successful, for achieving your dreams and getting everything you want out of the market. So whatever that income level is, you also want to write that down. So we'll talk about goals next time. We'll talk about goals because your goals are your stepping stone towards getting your dreams. Because on my website, and I'll close with this. Let me stop sharing this. Let me go to my website real quick. Okay, on my website, there's this video here. I want you guys to watch this video more than once. And you start writing down in your journal what your dreams are. Okay, what your dreams are. Because this is a video that just shows you the potential, right? The potential of what can happen for you going forward. Okay, so definitely watch this video over and over and over. Now, your dream may not be a tangible item. It may be an intangible item. Okay, write that dream down. It could be retiring your loved one from their job, having enough funds for your kids' college education, getting out of debt, right? Your dream could be to buy your first or second home. Your dream could be to fix the car you have right now. The dream to be to buy your dream car. The dream could be to take a luxury vacation for you and your family. Just take some time off. The dream is to maybe visit an exotic island for a month and not worry about, bills and things of that nature. Your dream may be to hire somebody to clean your apartment or home. Your dream may be to have a cook come in once a week to, cook up a healthy meal for you and your family. Your dream can be to rent a limousine and go out on the town and go to a fancy restaurant and get dressed up. Your dream could be, you know, sending money to a church, okay? Or your dream could be to help the homeless, feed the hungry. Your dream could be anything, anything. Just write it down, write it down, write it down, and then work towards that dream by setting goals. Your goals are stepping stones to help you get your dreams. Okay. You write down your monthly goals, your weekly goals, your daily goals. Okay. And now you know what you need to accomplish every single day. And once you accomplish those goals daily, you'll accomplish them weekly and you'll accomplish them monthly. Because we're in 2024, second month, February. First month is already gone. Can you imagine? We're in the second month of the year. Okay. So now it's important that we write down our dreams, get that trading journal, maybe clip out some pictures of the things you want. Okay. Clip out some pictures of the things you want, or the things you want to pay off, or the things you want. Maybe you guys want to create an emergency fund for yourself. Have enough money set aside in case the car breaks down or the refrigerator needs to be replaced because they broke down, or you need to replace your stove or your roof, whatever the case is. Or maybe have enough funds in place. Imagine having 12 months in place, 12 months of funds to help you pay your rent, and you don't have to worry about where the rent's coming from. That could be a dream, right? Paying all your bills off 6 months in advance. I'm talking about your cell phone bill, your car note, your insurance, your rent, okay, your electric, paying off those bills 6 months in advance. Okay, there's a lot of money to be made in the market, but he who has a trading plan can be more successful than the person who does not have a trading plan. So with that being said, I want to thank you guys for watching. Come back next week.